Hi, this is Roger Balzer Wealth Management. Welcome to the best 3-month period of the year. In this video, we're going to take a look at how a few indices and sectors did during what is supposed to be the worst 6-month period to own stocks. Have you ever heard the old Wall Street saying, sell in May and go away? I bet you probably have, but have you ever heard remember to buy in November? Or as Jeff Hirsch of the Stock Traders Almanac says, buy in October and get yourself sober. All these sayings are derived from the fact that since 1950, every single dollar made in the Dow Jones Industrial Average has come between the months of November through April. In fact, had you bought the Dow on the first trading day in May every year since 1950 and sold on Halloween, you would actually have negative returns. Within the best 6 months of the year, there's an even sweeter spot. It's from November through January. What we're looking at here is to see, did stocks get the memo for 2020? I'm looking at this and trying to take a look at 6 different indices that I have here. I don't think they did. It's as screwed up as what 2020 has been with a COVID-19 and the election results and everything that's going on. And what we're seeing here, and the question that I have in my mind is, if stocks didn't fall during what is historically the worst time to own stocks, which is between May and November, what are they going to do during the best period of time to own stocks, which is from November through January? Taking a look here, what you're seeing is the iShares Transportation Index returned over 45%. Invesco, the QQQ Trust, which is the NASDAQ 100, was up 34.5%. The Russell 2000 was up 30.15. The SPDR Mid-Cap Trust was up 27.27. The S&P 500 ETF Trust, SPY, was up 23. And the Dow Jones Industrial Average was up 19.17. What we're seeing here is all-time highs made last week. Market participation is expanding to new sectors and countries, and we're seeing the small cap area and emerging markets moving higher. My question again is, if during the 6-month period that's supposed to be the worst, we saw this market really take off, what is it going to do during the best times of the year that's supposedly historically there? The weight of the evidence continues to suggest that you should be spending your time looking to be invested, not looking to sell. Taking a look here to turn to the each individual index that we have in all the 11 sectors that are out there. This is the iShares Transportation ETF IYT, trading in a positive trend above its bullish support line. Support is at the red line of 192. If it breaks through there, you're then looking at the bullish support line break of 174. Once again, very positive for transportation. The QQQ's very positive, has had a huge run up with technology, trading above the bullish support line. Support at 260s, had the great run, but could be due for a pause coming here forward. Once again, remember the QQQs are heavy in technology. And as we saw during the election cycle, many things were happening with technology. May see the Senate get involved, which could cause a little bit of a pause going forward. The Russell iShares IWM Russell 2000 ETF, positive trend above the bullish support line. Support goes all the way back to 144, which goes back to 2019. Yes, it did break support in the major pullback that we had earlier this year due to COVID. But right now on a triple top buy signal, target is 206. Looking to the mid-cap 400 MDY of the spiders of the S&P, ETF's trading a positive trend well above its bullish support line. Support is at 310 near the bottom of its trading band on a triple top buy signal. Target is 520. Once again, we're starting to see the small cap stocks come into vogue here again. And looking at the SPY, trading in a positive trend above its bullish support line. Supports at 315, then a bullish support line break at 300. Could see some back and forth here, setting up a move forward. Unless we get something like a vaccine or something, then all bets are off the table. This thing will go straight through the roof. And taking a look at the Dow Jones Industrial Average, ETF trading at a positive trend above its bullish support line. Broke a double bottom at 265 on October 29th of 2020. Supports at 240. Could see the Dow take a little bit of a breather here because we started to see a little bit of a downtrend. But as long as it stays above that support line, I think we're going to be okay with the Dow Jones Industrial Average. Turning to our sectors, what you're looking at here is the sectors, 11 different sectors that are out there from May 6th through November 26th, or through November 6th of 2020. And only one of the sectors, energy, was in a negative territory. 9 out of 11 had double-digit returns, led by materials and consumer discretionary and industrials. Looking at the material sector, XLB, our take is the ETF is trading above the bullish support line. Support is at 53, 54 area or a break of the support line. Our target on this is 81. Consumer discretionary, the XLY, again, sounds like a broken record, trading above its bullish support line. Support at 138, then at 122. Target on this is 190. Industrial sector, the XLI, trading above bullish support line, support at 74, then at 66 to 69 area. It broke resistance on the way up at 69, so 69 could be a nice, good support area for that. Target is 190 on the industrial sector. Technology, positive, trading above its bullish support line, which is the red line there, going diagonally. Support is at 108. Then would be at 92 on the support line break. Once again, technology, extremely positive. Has had one heck of a run, though, since the lows way back in the March, April timeframe here. Communication services sector fund XLC, positive above its bullish support line. Supports at 48.49. That goes back to 2019. Bullish triangle pattern just broke out of. That is very, very, very positive. Could see this thing really break out on the upside. Looking at the financial sector, would love to see the financial sector here take off. Broke through at 24 in late May through the resistance line. Support is sitting very closely at 23. Target area is 30 to 31, which were the highs from late 19 through early 18. This is one of the biggest areas in the S&P 500, and would love to see the financial sector take off. That would really branch out this movement that we've been seeing in the market, going to new all-time highs. Utility sector, believe it or not, is actually on a positive trend, trading above its bullish support line at 54. Broke a bullish triangle at 62. Utilities are looking positive at this point in time. In consumer staples, the XLP trading above its bullish support line. Support is at 61, then down at 55. Have somewhat of a triangle pattern here developing. If it breaks out to the upside, could be extremely positive for the consumer staples sector fund. And let's take a look at the healthcare XLV. Positive trend above its bullish support line. Supports at 100, then at 95. Broke a triple top on the upside at 110 on November 4th. So the healthcare sector is looking extremely positive at this point in time. Now, taking a look over to the Dow Jones REITs is trading in a negative trend. Broke the bullish support line at 79 with a double bottom on September 21st of 2020. Target is 66. This area I would definitely avoid. In the energy sector, negative trading in a negative trend below the bullish support line, lower highs and lower lows, not positive. Avoid, 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 avoid. This has been Roger Balzer of Balzer Wealth Management, just trying to give you somewhat of an outlook on what we see has been happening with the securities and with the market. If you have any questions, thoughts, concerns on your investment portfolio or anything in general, even your 401k, if you'd like an opinion, shoot me over an email to roger@balzerwealth.com, or better yet, give me a call at 440-610-3012. Until next time, make it a great week.